Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here with a daily Forex market breakdown for December 31st, 2019. That's right, it is the last trading day of the year, last trading day of the quarter, last trading day of the decade. We are going to be heading into a whole new set of outlooks. We have decade outlooks, and we have all kinds of things that we're going to be discussing over the next few weeks. But real quick, let's just go over our disclaimer just to remind you that we are only doing this webinar for illustrative purposes. That is all. And now let's get into the meat and potatoes of it. So right now you can see me as well as our screen here. We are on the www.forex-trading-unlocked.com website, and at the top of the menu bar there's the workstation icon, which we've already hit, so we already are on it. As far as economic numbers, we're going to pass over that. We can see that the euro US dollar currently is doing really well. So we're going to go real quick and take a look at the dollar index. The dollar index is trading lower today. There's a lot of pressure from all the currencies against the dollar today. It's just not a good day for the Dixie. So as you can see, the dollar index is under pressure. What we want to do real quick is to show the monthly chart. And by the way, while we're doing this webinar, at any time, leave some comments on our YouTube if you're watching on YouTube, or if you're not, then you can jump onto YouTube channel and get on the chat and leave some comments for us about any of these markets, any questions you have, and we will try and address them either live or in our following webinars. And subscribe to our YouTube channel also while you're at it. So here we have the dollar index monthly. Why do I have this pulled up? Well, I'll tell you why I have it pulled up. So first of all, we have the sell signal that was in October right here. That's this big red bar. That's a bearish engulfing signal. And get this, it is now confirmed with the way December is shaping up. So we had the sell signal in October, which was then we had profit taking, and the dollar index started to show some strength in November, which eroded right off the bat in December. And we have gotten pile drives in this holiday session over the past week and a half, as the dollar index has just continued to erode, especially rather violently. The dollar is retraced against some of your more mild, lesser major currency crosses, which we'll get into. All right, so now that we've looked at the monthly, we have the sell signal that's going on in the Dixie, and we are definitely bearish. By the way, that monthly chart also has a head and shoulders formation forming too. Seems to be definitely shaping up. Now we're going to go to the euro US dollar chart real quick and see how this rally is going. Now here we have a nice strong bullish formation here, where this we originally made higher move highs a couple of weeks ago. And then we fell back in the retracement that we were came out of just a week and a half ago. We bottomed nicely or based nicely, and then we had this explosive rally 2 sessions back. That is one of the strongest upside moves we've seen in the euro US dollar currency in a very long time. And when it happened, we were looking for it to press the higher move highs, which it did. So now we have, as a basic technical rule, when you're making higher move lows and higher move highs, that is indicative of what? An upward trending market. Now, ironically, the euro US dollar, which has been in a very tight range for a very long time, I mean, think about it, it's been trading basically between 108.5 and 115 for the past year, and now here just in the month of December, it's gone from below 110 all the way up to now we're pushing 112.5. A $2.50 move in a month, and that's when we had a full dollar retracement as well. That's pretty strong volatility for the euro US dollar. We haven't had this kind of volatility in quite some time. So does that mean it's going to continue? Who knows? But right now, the trend is your friend. And speaking of trend, when you look at this last higher move low that set the real big base for this third leg higher, is if you look at October, here was our bottom. So here's our wave 1, we have our wave 2, we now are in our wave 3, confirmed with higher move highs, pressing this bull forward. Now, it's not the biggest rage or bull that we've ever seen, especially with the euro US dollar. We've had global markets around the world that are now showing signs of strength. The Eurozone, not Germany, but the Euro, just as the U.S. stock market, S&P and Dow have been up, and are making record highs and having a great return for this year for investors. So have the European markets, as well as China. Not all of Asia. All of Asia is booming, but China, when we've had all these bad numbers and whatever, year in and year out, is actually up over 20%. And so is the Eurozone overall for their markets. So that's a big deal. So the weakness that's been in the euro US dollar, where it's been basically riding support for a year and trying to hammer it, they couldn't keep it below 109. 110 seems to, or 110, $1.10 seems to be a nice base, and now here we're trading up at 112 half. I think you have a good shot at pressing 113 even into the new year. Remember, we've had a nice upside move. The dollar has gotten hit really hard over the past few weeks. So, and especially against some of your other lesser major currency crosses now over the past couple sessions. So it may be, it's very likely that we'll probably on Thursday or Friday see a nice little pullback where the dollar may actually get a nice little rally. But I would say that that's a corrective rally to sell. And the euro US dollar, if we have any pullbacks, it's probably going to be a break to buy. So with that being, where's our target? Well, I'm just going to put this little circle up here and kind of put it like this. This is where I pretty much think your target range is. As you can see, it's got a little ways to go, but not that much. If we have the volatility like we had 2 sessions ago, we could be there in a heartbeat. I've been trading this contract since it started in 1998. I traded the D-Mark, which then evolved into this, and the euro US dollar can easily move $2 in a day. So, but the average range and the way it's traded, even on excessively good or bad news, it hasn't really typically had more than a 50 to 70 pip range for basically a year now. But we'll see. Maybe we have a sign, we're showing indications that we're going to start to see some really big swing trading where intraday traders, boy, you're going to have some rides to that's for sure. And if you're longer term traders, you're going to start to see some bigger swings, that's for sure. But that means some good trends to catch as well. Maybe we see the euro US dollar up around the maybe say 115 area by the end of the year of 2020. That's really not that far to go. In fact, I would say that in 2020 you may see the euro back up at $1.20. Now, is it going to hold up there and stay up there? Probably not. There's all kinds of reasons to break the euro US dollar down, even if the dollar is falling apart at the same time. So let's go to the British pound US dollar and see what's going on there. This market has been a very nice bull for a while. So we've had a nice corrective break that happened over the past couple weeks in December, and then we had right here, we had a buy signal. This right here, when you see this low that just occurred, and there's 2 positive days after it, right there, that happens to be a high probable Japanese candlestick pattern. So just like we had the monthly pattern of dollar index, which has us bearish, which means we have a bias of a weak dollar versus the pound and the euro and other currencies for at least another couple months, at least as long as the dollar index stays where it's at to lower. It would take a very big rally to really, I think, turn around and really start to slow down the rally that's in the pound and like the euro. So now just on a daily basis here, we have this 3 inside up pattern. So you have this low that was set. So this was a higher move low, nice little corrective break after making higher move highs. So this will be our downside risk, excuse me, and then we have the last higher move high. We're going to put that there. That's going to be our upside breakout point. Or it could also be our containment for our range. Right now, what we do have is this rally that has followed through. So we had our first 3 days. Here was your buy pattern after the close. So during the day, after that roll, that would have been your buying opportunity or sometime during that following session, and that's when it started to take off. And then we had 2 sessions ago, that would be Monday's trading, where it opened up, stayed a little positive. And then here we have on December 31st, shabam, follow through. So this is really nice. So this trade worked out really well. We had the same pattern in the US dollar Canada, and it totally fell apart. That's the one nice thing about this pattern. When it works, you have a really good chance at reaching your targets. And then if it fails, you know this risk level here is, for one thing, this is a corrective pattern where, for instance, this market had to be breaking for a while for this pattern to be valid. It was. The market had been correcting. It set this low. Then we had this little next day slightly positive. That's called a harami buy. Not quite as strong as the 3 inside up, but that's your initial indicator to be like, hey, if tomorrow gets a positive close, and it doesn't need to be that strong, as long as it's positive, that gives us our. So the meaning that, especially since the overall trend in this market is up, this is a buy signal on a corrective break. Pretty good odds that this signal could be pulled off, you know. So anything can happen. That's why we know our risk is the low from 2 sessions below when it first started, the first bar. And then once you're in the market, there's your risk. You raise it once you start to get into it. There's different ways of managing it. And you can read a book about that, which we'll talk about at the end of the webinar. So anyhow, if you have any questions about this signal or whatever, or you'd like to know more, leave a comment on the video on YouTube and let us know, and we will give you an answer for that. So that being said, we have the market rallying up to, let's see, where is our target. So now we are getting close to our objective. So if you've been listening to our videos over the past week, especially since this signal had occurred, you can see that, okay, we are in our target range. So what does that mean? Does that mean you're done? No, it doesn't mean that at all. We have no idea what's going to happen, but we do know that we have reached our target. So now how do you trade this? What do you do with it? Well, if you are a bull and you had ridden this wave and you got in at this level down here when the buy signal was triggered, don't be a pig, you know, or don't be a hog, because hogs get slaughtered, you know. Be a pig and get fat and take your money, especially because it's New Year's Eve and might as well end the year on a good note. If you are a longer-term bull, which this market is in a long-term uptrend that has started back here, the slope isn't that steep, which is very nice. Now, if you look at even this slope, it's not that steep. So you have a lot of support. These upward sloping blue lines right here, these are the trends. As far as if this market was to continue and correct lower, to go on this lower blue line right here, and especially if it stays above this last swing, higher swing low here, if the market starts to go sideways and drop down here, not the worst thing in the world for it to then bounce. Remember, Brexit is on the table still. There's a lot of things that have to occur, but right now the momentum is definitely bullish. And then with the dollar index being bearish, that most likely will have us continue to higher move highs. So if you already, let's say you loaded up on this buy signal and take a little profit right here, it would be a really good idea to lay off part of your position and let the rest run. If you want to see how that goes and just keep raising your stops. You don't want to turn this winner into a loser, so definitely now that you're here, I would say make sure you've raised your stops up. We are having a holiday trade, so if you're worried about what can happen over the next day and a half, any type of pullback or whatever, like I said, take your money and run and be done with it. I'm not telling you to sell it. I'm telling you to buy it or do anything. All I can say is that the trade is done. So good money management, especially if you read the book I'll tell you about at the end of this video, you would be doing that. So that being said, we will move on to our next market, which this is a really good indication of what is going on with the US dollar. So, as we all know, the US dollar is the flight to quality currency across the globe. No matter what your perspective is on America around the globe, when things hit the fan, you start buying dollars. That's what happens when you have big money, especially. Then if you don't buy dollars, what is the other currency that everyone in the world definitely buys, even if they're buying dollars? Well, that would be the Swiss franc. So what we have here is one really bearish move for December. Talk about an ugly slide. So what is happening in the Swiss franc, I think, is a really, really good indication of what's going to happen with the dollar. So let's see, we got to move this chart over a little bit. Okay, so we have a very steep sloping downtrend in the Swiss franc. Now, normally a slope this steep starts to worry me about how much it can be maintained. Even though the trend may be lower, it's where you start to see a lot of sideways action start to develop, just because markets just don't drop like a rock. However, this one certainly is, and it's funny, this has been leading the dollar index. Before the dollar index really pressed new lows, the Swiss just kept on grinding lower, grinding lower, grinding lower. So the US dollar was losing strength against the Swiss, and it was really a good indication once it had started this grind lower that there was another wave starting to emerge, or most likely would emerge. So let's take a look at what we have. We had this initial high where we fell off of parity, rejected again. Remember, the US dollar Swiss has been buttoned up around parity for a long, long time. So real quick, just to give you a review so you can see what I'm talking about, this is a monthly chart. Parity is right here. Okay, so we're going to draw a horizontal line right here at the parity mark, okay, or right around there. So you can see that this is where it's a really good strong pivot, and especially over the past few months, it just kept trying and trying and trying to get through parity and stay above it. Well, it just couldn't do it. This here, what we have right now, is a very bearish signal. It's a bearish engulfing line on the US dollar Swiss on the monthly basis, most likely indicating a chance for this market to head lower back down towards this 94 area, 93 cent area, and that would be within the next couple of months, 3 to 6 months at the most, with the way the velocity of this break is right now. And that's why I think you're going to start to see a little bit of consolidation with the US dollar Swiss perhaps, but not necessarily the US dollar. But still, it's going to be eroding, it looks like. It's a very bearish sign right here that any type of bounce, I would say, with the US dollar Swiss, just like with the dollar index, I think will now be a corrective rally to sell into. So if you're an aggressive bear, and you've been really nailing this break, maybe now is the time to lay off a little, take a little profit, and look for some places to layer back in your as you increase your short position. And then for options traders too, I think it gives you a chance to, once we get a little bit of a correction, have some nice plays where you can start to really have some low risk opportunities to capitalize, actually, where you'll get a really good bang for your buck, meaning your risk reward ratio will explode, where I think you can have some, like, literally, especially in some options, on binary options and futures options, like 5-to-1 profit ratios, but not really putting up a lot of risk and having a good chance of some very good volatility moving your way very quickly. So with that being said, don't try and catch a falling knife. If you are a bull and you're looking at the US dollar Swiss, I would really say be very, 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 very careful, and I can't even stress that enough. So with that, we're going to move on to the US dollar JPY. I'm going to move over to Asia. The US dollar JPY is the stable currency in Asia, and we know that, wow, it has gotten hit hard over the past few sessions. So that's another thing too. When the dollar index is really, really under pressure, that's the only thing that breaks this US dollar yen. I don't know why, and I'm just looking to see like it's going to bounce back, even if the US dollar keeps getting hammered. Because that's what's been happening. This market has been trending higher while the dollar index has been trending lower. Did it cap out in December here, and was it rejected? Is it going to fall apart and make new lows? Anything's possible. What I do believe is that it's absorbing this initial shock wave with this big downward move in the dollar index. Obviously, this is helping to fuel it. But you can see how the yen is bouncing off of its lows today. When the dollar index gets slammed, this market breaks. When the dollar index barely moves down, this market rallies and the dollar is strong against the yen. And I think with the trade thing what's going on where we're at, we're not at a complete impasse. We'll see how things go, but I think that there's a chance of some sort of deals coming that no matter what, Japan is, I think, in a good place. They're already put with their strategy, knowing that something was going to happen with China and the United States. It would benefit, obviously, the United States. And the thing is, Japan has benefited from this whole move with China over the past year. So, and they will continue to, because of restructuring that's been done. Once you start having new suppliers and they're doing the great job and you're saving money, you're going to do that. So you can't. I would say that China is just putting the brakes on what's happened to them. It's not going to help them actually grow in the future. I think their growth is going to be now internal more than it's going to be external. So with that being said, the US dollar yen, it's in a bearish posture, but am I overly bearish? Not really at all. So what I think is a good idea is to look at the trend. So obviously we have broken the trend line. So here we're going to take this, and we're going to look at this easy sloping here. This is more of your gradual slope for this bull market because it's a grind. Now we are just below it, but we have a lot of support here. So now we're going to put a horizontal line here and kind of give this right here. This is kind of our pivot. So as you can see how many times it touched down, like it may nibble below it a little bit, but it's not that harsh. And then I would say that this low right here, that's kind of your directional line in the sand. Like above here and below here, that's where you're going to have your trading. That's your major pivot line for direction. Okay, so here's your pivot line at 107.888. And then we have right around 108.47. This is your major pivot, kind of where the low was today. And so we'll see what happens. Now, like I said, the dollar index may continue lower. This market may start to go sideways and may actually get a rally. It's been bullish while the dollar index has been breaking. Now, here's something that we're going to look at in this trade zone that's really looking nice. The Australian dollar, US dollar. This is big. I think the rally you're seeing here today is a follow through on the fantastic news that we got these stock market averages that globally are very impressive, especially coming out of the Eurozone as well as China, which both are places that at the beginning of the year everyone was saying between the tariffs and this recession that's supposedly happening in Europe and what have you is going to plague them, and it's going to be a big problem. And here we found out that none of this has occurred. It's not this whatever there was their foresight, it was wrong, and that right now the stage is set for a very strong year for both China, even if there's no trade deal, and strong for Europe because there is no recession. What they have is a big turnover in labor force there. That's where they have their problems. So they have their auto industry, which has laid off a really, really large percentage of their manufacturing labor force in especially Germany over the past 5 years, especially the last 2. So you have a lot of people that are unemployed or shifting careers and are being retrained. These are all people that are educated and skilled, but they need to be moving into new industries. The question is, where do they go? Right now they are in transition. So that's where their recession comes from. It doesn't come from lack of trade or bad things going on in the global economy. It happens to do from internal pressures. Plus they have a large amount of people that they've taken in. They have a couple million people that they've taken in that they are supporting right now that are refugees. So that's another issue that they're dealing with. And obviously they're getting through it and are coming out looking really good for 2020. So that should give a little lift to the euro. More reason to see weakness in the dollar. But these same things that I was talking about for those now are applicable for Australia. So Australia being a major commodity producer, the fact that China is not in as bad of a place as it looked like they were, that means that if China is not doing bad, then the engine should keep on moving along, and they know that their numbers are just where they're at right now or even come back a little. This is good for the Australian dollar, the whole continent of Australia, actually. So it'll help to fuel their commodity industry and bring profitability as well as volume up in business and help to secure their labor force moving forward into 2020, regardless of what's going on. As far as what was originally anticipated. You got to remember that the Royal Bank of Australia was supposed to do a couple moves that they did not do in the fall. One was the that they had said for months for sure, absolutely, we're going to cut 3 times. And then all of a sudden after twice, they stalled and started to do other things and pull back on that. So that's kind of an interesting thing that they had already started to see the inklings of what's going on, and now they saved a bullet. So this is good. So let's say that you have a problem, a slowdown that truly happens in China over the next 6 to 8 months. Australia is in a much better place than they were a year ago to withstand that. So that being said, let's look at some levels here. That's what you guys want to hear. That's what you want to know. So this obviously down here is our major pivot of strength. This right here is also going to be another pivot level that we're going to use. And then we're going to draw this trend line. Now here's the one thing that kind of scares me with this market. It's really not that steep of a slope for here. But this current rally of the past 2 weeks, this is very steep. Does that mean it's going to fall apart? Absolutely not. It could correct, or it could just start to go sideways and hold this area for a little while and just get a little bit closer to this upward sloping blue line. I think that this pivot line here is probably going to be in a good place, and you don't have to worry about it, but just in case, let's kind of figure out a median point. So let's say that today is year end, and the Australian dollar actually does start to turn south. Well, then let's find a little place for it to go. So we're going to use this, and we're going to use this. Okay, so that's done. Let's get rid of the Fibonacci numbers here. And then we're going to change this one here to make it a little bit easier to see. We're going to make it purple. Okay, So what are we doing here? Why is Teddy doing this? This is what our rationale is. So if we have a correction here, I think that overall, and we'll put this in here and we'll make this yellow again. So where are these little steps leading to that we got drawn here? Let's say that today becomes the year-end high and the Australian dollar, US dollar starts to correct. Well, our first point of support would be this little area right in here. Okay, so that would have us falling down on this upward sloping blue line, as well as challenging this pivot where these highs came, where this high got rejected, and then we had the breakout right here. Very good target point for a nice little correction and a bear market settling in, but just a little area for a little profit taking. And then let's say we do take out this upward sloping blue line and start to come down to, say, something a little bit more of a gradual sloping trend line like this one here. So see this lower upward sloping blue line here? Look at how this fits right into our pattern here too. So then I think that if you look at this little area here, this would be the extreme, I think, of where we would hit. And then I'll put this one out here to kind of make it more of a longer term if we go sideways. There we go. So somewhere, if we have a correction, I think you would see a bounce here and then continue higher. If you have a failure from here, then I think you start to travel either if it's a sharp break down to here for support into this little support band right here between 68.91 down to 68.58. So it's actually a pretty tight range. It's not that very big of a move that you would be getting for support here, but I think that it's very sustainable to catch the market should we have a correction that severe. Now, what would happen? How would that happen? The only thing I think that would make the Australian dollar, US dollar fall down to those areas would be that the dollar index starts to rally, China starts to slow down, and there's some big problem with the US-China trade deal. Is that going to happen? Who knows? It's been a super circus the whole way along. But numbers have shown that in the midst of this trade war, it doesn't matter what your take on it is, and most people never would have thought that this would be possible. We have the stock market on record highs. The S&P 500 index is very strong. So is the Russell index. So is the Dow. The companies that are in it, the earnings are strong. There's every reason to see a positive year next year. Could a recession happen? Absolutely, could happen at any time. But odds are that we're going to have at least a 5 to 10% probably appreciation in the overall market over the next year, which is a rational return. And just slowing down alone like that would be good for us to help to base the market. That being said, the tariff war still, once again, will not have hurt the stock market. And I mean, everyone said it was going to crash the stock market. Obviously, that was not the case. And it doesn't seem like it's going to hurt it either. It can only benefit it. Then we have the fact that the Chinese markets, the European markets, all these other markets have also benefited in multiple ways because of these tariff wars and whatever. So if the tariff war didn't hurt the markets in 2019, who thinks it's going to hurt it in 2020? I think that argument, and I've heard a lot of people who were really were skeptical of, and you said 12 months ago that the stock market would be where it's at and the tariff war would be where it be at, they would be like, oh, that's absolutely absurd. Well, all the top economists and top gurus, well, things are absurd, I guess. That's where we're at. So does that mean it's going to be absurd in 2020? I will not even touch that argument. But I think that no matter what, we have strength. We have earnings that are driving the markets globally. And if that's going to happen, the Australian dollar, US dollar, has a really good chance at actually going much, much higher. So since we've been babbling about this daily little analysis, look at this. This month, we have a accelerated move. That's a big rally for this month. We have a nice basing that's happened over the last 6 months in the Australian dollar, US dollar. Even if it's not a big bull, but it keeps following this the lower trend line that we put in. Let me show you here. We'll get the daily back. It's too hard to see with the monthly. Just if we could just ride this lower upward sloping blue line here, and we just maintain that as support over the next year, that has us guiding up in a way that we can start to have where we're at right now. That'll be our base come the springtime. I mean, look at where this upward sloping blue line is. So if we just go sideways and start to bobble around and start to buffer around highs, the Australian dollar, US dollar has a really good chance at, by especially May, now June, that where it's trading right now, this could be the floor. That is exactly what I'm saying, that we could actually be trading right now above the base that becomes the norm for the Australian dollar, US dollar. So there you have it right there. Today's trading alone, we have just broken through, we have breached the floor or the ceiling to become what may become our new floor by summertime. Now we could obviously correct and bounce along the way, but come June, it would be really interesting. In fact, I'll put a little circle right here for June, that this is our target right here. And then I'm going to put an arrow that the market bounces off of this and continues higher. So this is right here. This is the end of May, beginning of June. That's our target. Is that possible? It's very, very possible. Is it likely? Anything can happen. Like I said, with the dollar index under pressure, I think it's a very, very easy chance that that could happen. Now let's look at the New Zealand dollar, US dollar. Now this is a market, if you are a bear and you like to sell something, don't even bother looking at this market, because this market is like a balloon underwater. This is an accelerated trend. All I can say is right now, especially if the dollar's under pressure, this market's looking good. We look at it on a basis, and wow, this is a big rally. Plus you had the bottom that was set before there. This is a bullish engulfing signal right here. In fact, there's actually that plus another 3-day pattern. This whole base right here is huge, huge, screams buy me on a monthly basis. And then with this accelerated rally we've had today, that locks in pretty much, I would say, you key off of the December low of 2019 for the New Zealand dollar, US dollar as the base floor line for the next, like, it could be upwards of 2 to 3 years. If the dollar index especially starts to really get hammered over the course of the next 6 months to a year and maintains a bearish posture, New Zealand dollar, US dollar could see levels it hasn't seen in multiple years. Now here's another trade that you want to really look at. So we had the US dollar Canada that had a 3 inside up buy signal not too long ago. It had set this low here, and it's this little pattern right here. If you look at this, let me move this a little bit over like this. You see how this bottomed here, and then we had 2 positive days. That was our buy signal, and then it fell apart. And that's why we like this in the British pound, that signal that I had shown you, which is the 3 inside up. If it fails, and let me show you this by drawing this, it'll make it a little bit easier, I think, here we go. Okay, so let's just say here was this buy signal right here. So we got this, and let's say the market had rallied up, which I don't know, why is this not drawing? Okay, let's get this brush. Okay, so here we go. We're going to draw this. So let's say the market rallied. That would have been our buy signal. That would have been the ideal thing. However, it didn't. Instead, what it did was it failed. So once it came right here and fell, this is that's our new signal. So it's initially a buy, but it's also a reversal. So when you have your risk, and this was known because of the low, that would be your risk. You know that, one, you no longer want to be long if the market touches down to there right off the bat. So you're out the long position. This market's in a bear market. This was a corrective buy signal. It wasn't necessarily meaning the market's a bull. It's a corrective buy signal. It means that the market had to break into this pattern, then you buy it, and then if it does hit its target, like it did in the British pound, then that would be where you take your profits, especially if it was a bear, like this market's a bear. You would not think or expect it to be a continuation of a bull market or the very beginning of a bull market. Could it be? Absolutely, but that's not how the trade is. It's meant to just go to a certain signal. That being said, you have the failure, that's not going to get hit, then boom, look at the side here. The reversal wipes out your loss. So you would have been in right around here, your risk would have been here, and right now you're at 2 to 1. You would have already made your money back on that and be positive for the second trade. So that's how you learn how to trade these signals. which you can learn about in the book I'm going to talk about in just a minute. So here we looked at the US dollar Canada on a daily basis. Now let's look at it on a monthly basis. This is not looking good. This is starting to look very bearish. So if the dollar index is correct and the dollar index continues to go lower, that means that the pound, the euro, and the Swiss are going to most likely start to continue to make higher move highs against the dollar. The US dollar yen, not quite so. That's going to be, I think, the one that you have to be much more careful of if you're a yen trader, at least with the US dollar cross. Then we have the Australian dollar, US dollar. I think you're going to have a nice positive to higher momentum going on for a while, especially in the next 3 to 6 months, and that would be as long as the dollar index is under pressure. Obviously, any type of turn in the dollar index and any sort of real corrective move where it starts to really pressure some resistance levels, that would mean that these markets would put the brakes on, and that's where you look for a little bit of a correction. However, the overall trend right now in all these markets is now against the dollar. We have set the trend. So now this market here, which has been a bull against the dollar, and oops, we got that. Let's get that one off. And now we want to get to our trend line. So here is our trend line here. We have this coming down to here. And then we're going to take this. Oops. And then we'll put it to here. So for this trend right here, that's not so bad. It really isn't. However, if you use this low and this low, what have we done? This upward sloping trend that we've been in for a very long time, we have just fallen through it. So let's go back to the daily chart and see what this looks like. All right, so this little mess that you're looking at here, we had this buy signal that came into that support line, and that was where you're looking at, hey, if the US dollar Canada is going to bounce, this is the spot where it's going to happen. It didn't happen. It failed. That is a negative sell signal, which gets us back again to the dollar index, where the dollar index most likely is going to continue to go lower. And as far as how much lower, this is a good question. So if this little section here is a head, and if this area around here is a shoulder, then that means that this little section here might also be a shoulder. Now, if this is a shoulder and the second shoulder, that means that this bearish engulfing line that was in October has set off the slide that will probably go not just for the next 3 to 6 months. It could have us targeting, let's see, let's get the brush again. Paintbrush, and let's just say that we go from here. We can start going this way, and this goes over the course of into 2021. Now let's get a little bit of help from our old pal Fibonacci, and then we'll throw in a couple of quick lines. And this is big. We're heading out of 2019 and into 2020, everyone. It's not just a turn of a decade. It's a turn in the US dollar, the way it's looking, and it has been for a while. So we have our little line in the sand there. Now we're going to draw a little ellipse. So right now, this pretty much is your little target range for the US dollar. This little area here. How long will it take to get there? Well, that's a whole nother question. I would say that, let's just say we go to the middle of it right here, the center of the ellipse, and also the center of that little support band. That has us in November of 2020. So that's 10 months from now. But the pricing is where we're looking at. So 94.30 down to 92 cents and 47. So somewhere in this $2 range, which is not that far off. You're looking, it's only a little over, just under $3 of break, and the dollar index would have us touching this upper part of this 94.030 support band. With that being said, you have, let's see, it's December 31st, so that puts us, like I said, 10 months out to into this band somewhere would be, I would say, actually more if we had a really volatile slide. Somewhere we have an election year coming up, maybe between June and November, and then we also remember, that's right, we have an election. So we're going to put a vertical line here for October. So November is where we were talking. So here's October 1st. So we're just going to put that right there because that's the month. And this will be our little line in the sand for the dollar. Now we have an impeachment trial that is going to be beginning in the new year. And then we also have an election, which would be this line right here. So we put this line right here, we put it right in this spot here, and I think that this is a very good viable target right here. We're going to put it right here. It's this little circle inside the ellipse. That's our little X marks the spot. I think that's a very good target for the election year. And for us to break into the election, could it go lower? Could it stop short of that and start to rally? Remember, as a whole, this market is in a bullish posture. It has been trending for a long time. The only thing is, by the time you can confirm that this market no longer is a bull and has become a bear, you're talking about months to a year that has gone by before you can actually validate it. So we're trending lower. This also puts us into this upward sloping support band. If we fall below it, maybe that becomes the extreme and we bounce then and then start to come back. Very likely, very possible. Or we continue lower, who knows? But right now, the short run, it looks that for the next 10 months, we're going to have the dollar index under pressure and heading lower. So what does that mean for us with our other markets? That means that the Euro US dollar has a very good chance at rallying. So I'm going to give you a couple of points really quickly while we close out with the dollar index. We'll go back to the Euro US dollar and see where that's at right now. Okay, so for the Euro US dollar, here's our predictions. It's that within the next 12 months, the Dixie falls down to somewhere between 93.747 and 92.403. For the Euro US dollar, we have right now a short-term rally targeting 112.5, not very far away. That may even still get touched. That could have gotten touched before we close. That's right. I think the currencies have just a little bit longer. The rest of the markets are closing. And then let's see, 113 even is the short-term cap. Longer term, if the dollar index falls down where I was looking at, I'm looking at $1.15 to $1.20 by sometime by the election for the U.S. elections. The British pound US dollar, regardless of Brexit, right now I think is targeting $1.34 even, so $1.3400, with $1.37 being the first intermediate term upside target, and then we have $1.42 to $1.45 even as the longer term upside targets by election time. That is irrelevant of Brexit. This is just a dollar driving force to put these markets up there. Then we have the US dollar Swiss, which obviously is definitely not showing any strength for the dollar. We have 94 cents as the initial downside target, with 92 to 86 cents being the extremes by election time. Now remember, the Swiss, although that's a big flight to quality currency, the dollar would have to really, really be crashing for it to really drive the Swiss, I think, any lower, because the Swiss has already had a big move already against it. Then we have the US dollar yen. This is the one that's the question mark. I'm telling you, do not just assume that if the dollar index could collapse, the US dollar yen may rally. It may be the one currency that is not going to follow the trend against the dollar. I'm just telling you. That's the one I'd be very careful with if you're a US dollar yen trader, especially. Maybe not necessarily the yen versus other currency crosses, but definitely with the US dollar yen. Then we have the Australian dollar US dollar. We have targeting up to 72 cents, with 75 cents being the more longer term target. These are all very, very manageable and reachable over the next 12 months. Then we have the New Zealand dollar US dollar that is targeting 70 cents right now, with 73 cents being the longer term target. These have both been extreme bulls in the short run, so I don't want to give too much credence to big long term targets, because a lot of other things have to manifest, like a trade deal and confirmation of many other things. So we'll be watching those numbers as the year unfolds. And then we have the US dollar Canada, which right now are going to $1.2870, very likely to get hit. At least right now, volatility is in the average to range. With the way the market has been breaking, it's got a really good shot at hitting that target. Not necessarily, obviously, it's not going to happen today, but over the next few sessions into next week maybe, with $1.25 and $1.20 being the longer term targets for a corrective move, or excuse me, a bearish move now against the dollar. So the U.S. dollar being, the U.S. dollar being bearish against the Canadian dollar. So that would be also leaning in towards the election time with the dollar index. That's when you would want to be looking out for those things. And obviously, we'll be seeing what happens, and anything can happen. And if you want to learn more about these buy and sell patterns, you can read the book High Probable Japanese Candlestick Patterns. And that book will tell you about the correlative trades, how to trade the FX markets on these signals, the futures markets, the options markets, the binary options markets, the ETF markets, and the equity markets as well. And through it, you can use these buy and sell signals. They work in all these markets, whether you're a Forex trader or a stock trader, it doesn't matter. So you read this book and you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. And especially if our sell signal in the dollar index maintains itself from that October bearish engulfing line that formed, that's going to be our guide for the currencies for the next few months into the election until November, so 10 months from now. Well, actually 11, but since we're December 31st, we're going to say 10. And then who knows what will unfold after that. Then we have the decision on who the new president is or not new president continuing. We'll see what happens with that, see where the markets are at that point. Right now, our expectations are that the stock markets will stay relatively positive and be strong for the next year. And with that, you have a happy new year, and please leave your comments on our video channel on Twitch, or excuse me, on YouTube, and we will get back to you with our follow-up videos and answer your questions. And also subscribe to our YouTube channel. It will really help us out as far as giving us the driving force to know where your content lies, or where you're looking for content at what times. And if you like our content, subscribe, and we will continue to make more for you. With that being said, please check us out every day at www.forex-trading-unlocked.com. Have a happy, safe New Year's holiday.